Back to Fulfillment Key. Today we're going to be looking at another dividend stock. As always, I hope your day is going amazing and I hope you guys are having a great day. Stock's went up 3% today, so that's always nice. Turn this fan off. And today we're going to go over CHW, which is the Calamos offering of a basically globally diversified fund, mainly which specializes in different kind of convertible securities, tech stocks, normal stocks, and consumables, commodities, all that kind of thing, but mainly tech. But it's also interesting because, we looked at BST and BSTZ yesterday, and now today we're looking at a completely different product, which aims to kind of dip their hand in all three sectors of the closed-end market, which I think is quite interesting. And of course, it offers a 12% monthly dividend. Now, as opposed to BST and BSTZ, which had increasing distributions, this fund has shown itself as a very promising offering, keeping its distribution the same since 2013, not changing a thing and not missing a distribution, which is interesting and nice if you're a dividend investor. Anyway, cutting to the chase, let's get straight to it. So, you might be asking, as always when we look at funds, why should we look at this fund, CHW? Well, first of all, it gives a high dividend yield while also having a significant amount of upside. I think it's interesting to look at this one because prior to the 2021 time, around 2020, I remember being in this fund and it was yielding about 7 to 8%, and at the time that was a very good offering. However, now when we're looking at it and it's yielding 12% and there is a 35% upside as well, it almost looks like an offering that is not too good to be true, but there's a lot of offerings like this in the closed-end fund marketplace that we are getting these insane yields, and we're also seeing a bunch of upside. If stocks do recover in the next 3 to 5 years, we could get that in addition to the dividend. So it could be a good 3 to 5 year play, or even longer if you want to hold it longer. But this has almost similar return to the S&P. Even if you don't reinvest the dividends, it slightly underperforms without dividend reinvestment. But when you're investing in closed-end funds, you're more looking for that peace of mind of having the income and having less drawdowns in the time of a market downturn, which is important to look at and important to have if you're an investor like me. And of course, the most important thing we look at is if a fund uses leverage or not. This fund uses about 33% leverage. What that essentially means is they have 100K, they're going to use another 33% on top of that. So their entire portfolio would be 133 with a 33 borrowed against the 100 when you look at it on a percentage basis. But, that's one red flag of this fund, but everything else looks pretty solid. So let's take a look at, what I was just talking about earlier. So as you see over the last year, it's down about 35%. Interesting. But, when we look at it that way, it's also like it could go up the other way too. And we're in this interesting sector. Like we looked at BST, which is down about 50%. You have that 50% upside and that 11% yield. With this fund, you have the 12% yield. And you're looking at it, like I stated, it slightly underperforms the S&P 500, which is another interesting thing to take a look at. Now, as I mentioned earlier, how does this fund yield its 12%? Well, by their own literature, they say that CHW is a global enhanced fixed income offering. Again, this jargon that they like to say, but essentially they're trying to give you a high level of income and capital appreciation as a second goal. It has a lot of flexibility, which they state. Essentially, they split their investments the certain way with equities, fixed income, and convertible bonds. And they focus on all kinds of markets, emerging markets, the U.S. and different other kinds of countries that are similar to the U.S. and different companies that are within the U.S. and out. So let's go over the fund's holdings and then talk about their most recent dividend. So taking a look at the CHW holdings, it's very similar to that of BST and JEPI, and the fact that these are all companies for the most part that are not all of them, but at least 4 or 5 that I see right now are already in the S&P 500. So when you look at it that way, it's almost as if you're getting an income from similar stocks to the S&P 500. Now, TSM or Taiwan Semiconductor is obviously a Chinese company, so you have that 3% exposure to a Chinese company that's also based in the US. But then you got Microsoft, Alphabet, Apple, Ford, Novo Nordisk, Amazon, Alcon, and of course ASML Holding and Glencore are things I haven't heard of, but I'd assume that they are good, and as always, you should also look into them as well. But those are the holdings of CHW. Now, if we look at it by, an asset basis, we can see that 50% of it is stocks. So it is heavily equities based, which is interesting to look at, but it's not necessarily a bad thing because if you are buying the S&P 500, that is also heavily equity based. So it's interesting to look at it that way. We've got a lot of convertibles and corporate bonds and US securities, which, are 3 ways to get income into a portfolio. So when we're looking at it from that basis, almost most of the other half is fixed income securities, with the other 50% being equities. And if we look at it from, the rest of the things, bank loans, preferred stock, we went over PFFA previously on this channel, which is a preferred stock only closed-end fund slash ETF. That would be interesting to add to your portfolio if you don't have preferred stock already in your portfolio. But if you wanted to consider that, there is a video I can link in the description below. But yeah, this offering is mostly just stocks, and then the other half is fixed income. Now, if we're looking at the most recent distribution, so as of recently, this fund started using return of capital. If we look at the distribution and we break it down, about the distribution per share is 7 cents. And if we look at that distribution, we can see that all of it was indeed return of capital. Now, sometimes this can indicate that a fund is struggling, and other times it could indicate that they want to offer a tax advantage to their investors, similar to CLM, which we went over on this channel. CLM is a fund that primarily uses return of capital in its strategy as a fund in order to reduce the cost basis of a person's stock in their portfolio. This can be advantageous to you if you're looking to, look out tax strategies in your portfolio, if you're in retirement and other kinds of things like that, or you're looking to reduce in terms of cost basis to not have any taxes on your stocks. So, of course, I'm not a tax accountant, so you might want to talk to one about it, but that is just what I've heard from my own brokerage and other tax accountants that I've spoken with. But generally in the past, this fund has used, a mix of long-term capital gains, short-term capital gains, and return of capital, and actual income from its securities that it holds and its fixed income products, which I think is interesting. Little red flag, but nothing too much to worry about. And that is most of it. I know this is a short video, but CHW is something that just popped up on my radar, and I wanted to share it with you guys, do my little breakdown of it so you guys have a better understanding of it. As always, if this video helped or you liked it, make sure to like and comment any questions you have, and subscribe for more funds, more videos, and more advice. Thank you guys so much, and I'll see you all in the next one.